Lovely. Okay. Hello, everyone, and welcome to our September webinar. We've got Greg here with us today to go over his presentation, Protection in 2025, Safeguarding Against the Unknown in Uncertain Times. We believe the presentation should last around half an hour, including some time for some questions at the end. So if you have attended these webinars before, as you'll know, there is a chat pod towards the right-hand side of the screen. Just pop any questions you've got for Greg in there or anything that you might want clarifying, and we'll go over that at the end of the presentation. There will also be a small survey towards the end, so if you do have a moment of time just to leave some feedback, that would be really appreciated. Otherwise, Greg, I will leave this up to you.
Good. Yes. Good morning, everyone. And yeah, as Jess said, that's the headline. That's the webinar topic for today. I think it's poignant in this state of play at the moment, and we're going to dive into that in greater detail. So, just the bit of housekeeping at the outset. Just looking at the risk disclaimer. From a risk disclaimer, this presentation is for information purposes only and does not constitute any financial, legal, or accounting advice. Ascot Wealth Management is authorized and regulated by the Financial Services Authority. We're not speaking about investments here, but these products might not be suitable for everyone, and annual management charges apply. Tax legislation could change in the future. The value of tax reliefs will depend on an investor's personal circumstances. And these investments/products could rise more than mainstream investments. However, you could get back considerably less than you invested. So that's just a bit of a risk disclaimer. But there's a picture of myself. So yeah, just a little bit about me. I see a few attendees will know me already. Been advising for Ascot Wealth Management for just over 6 years in a wide array of topics, products, and outcomes. So it's been a good period. So yeah, let's get into the meat of it. So I've got a positioning statement here. Sorry, I was talking, but I didn't update the slide there, so apologies. But yeah, let's get into the position statement. So this webinar will explore the role of financial protection in today's challenging climate, where the cost of living crisis, economic volatility, and shifting workplace dynamics all put pressure on households and businesses alike. Rather than diving into technical product detail, I did a webinar on that more in detail in 2023, so that is out there, and we can send you a link to that. This session will look at protection in practice with real-world examples of how life assurance, income protection, critical illness cover, and business-related solutions can provide stability when it's most needed. So looking at the UK under insurance gap and international comparison, you can see that recent data show that the protection gap in the UK is large, persistent, and growing in some areas, with many people exposed to serious financial risk without any or adequate cover. For example, in 2023, there were 247,000 new individual income protection policies sold, a record high. Yet, despite that growth, almost half of UK workers, about 48%, have no form of protection cover at all. No life insurance, income protection, critical illness, etc. So among UK homeowners with a mortgage, 8 in 10 do not have income protection, and 2/3 have no cover in case of critical illness. Within key demographic groups, the underinsurance is stark. Only 15% of people aged 35 to 44 have income protection, a group likely to have mortgages and dependents. And when you zoom out to compare with other economies, the UK remains one of the largest life insurance premium markets in Europe. For example, in 2023, UK direct life insurance premiums reached approximately $268 billion, higher than France, Italy, and Germany. However, despite having strong insurance penetration in life insurance by premium volume, gaps persist in income-based protection and health risk protection. Globally, the protection gap across life, health, natural catastrophes, etc., was recently estimated at £1.4 trillion. And industry leaders agree that there is both a moral and market imperative to close this gap. So in short, the UK has a mature protection market in some respects, but those headline numbers obscure large underinsured populations, people without income protection, critical illness cover, or sufficient health or life cover. That underinsurance gap leaves individuals, families, and businesses exposed, particularly in times of volatility and rising cost of living. So let's get into the webinar agenda. So the four bullet points that we're going to discuss in greater detail is that I'm going to further set the scene. We're going to go through what protection really means in 2025. We're going to go through a few real-world applications, and then we're going to talk about the balancing act, the affordability versus necessity. Okay, so there we go, setting the scene. So when we talk about protection in 2025, we can't do it in isolation. We have to look at the backdrop, what's actually happening in people's lives today. So major thing here is cost of living pressures. Over the last few years, we've all felt the impact of rising costs: food, fuel, mortgages, and rent. Disposable income is under pressure, and naturally, when people are looking at their budgets, things like insurance can slip into the optional column. But here's the irony. The very environment that makes people feel they can't afford protection is the same environment where they can't afford not to have it. Does that resonate with you in what you're seeing or experiencing at the moment? Second thing here is economic volatility. So we've had interest rate rises, markets swinging back and forth, political and global uncertainty that filters down to households and businesses. So for individuals, that means uncertainty in jobs, in investments, in pensions. For businesses, it means more pressure on margins, staff retention, and overall stability. Volatility amplifies risk, and that's exactly why protection becomes a stabilizer. The next thing to talk about is the shifts in the way we work and live. We've all seen a big shift in in employment trends. More people working for themselves, freelancing, gig economy jobs, and fewer traditional employer benefits. This means less built-in safety nets like sick pay, death in service, or private healthcare through work. So the responsibility increasingly falls back on the individual or the business owner to create their own safety net. So let's bring this together. So if we step back, the sign of the times, in quotation, in 2025 is really this: higher day-to-day pressures on household budgets, more uncertainty in the economy and job market, and fewer guaranteed benefits to fall back on. So against this backdrop, protection isn't just another line in the budget. It's the foundation that allows people and businesses to withstand shocks. And that's what insurance is to insure against the unexpected. So with that context in mind, a very important context, I might add, the cost of living, the volatility, and how changes and the changes in how we work. The question becomes, what role does protection actually play in today's world? And how do we make it resonate with people when they're already feeling stretched? And that's what we're going to explore next. Okay. So what protection really means in 2025. So when most people hear the word protection, they think insurance, a policy, a premium, some paperwork. And yes, that's technically true. But in 2025, protection is bigger than that. Protection is about resilience. It's about creating stability when the world around us feels unstable. So beyond products, it's peace of mind. Protection is the ability to sleep at night knowing that if something unexpected happens, for instance, an illness, job disruption, even worse, at least your family, your home, or your business won't unravel. It's not just about paying out a lump sum, it's about maintaining continuity. That's the important thing, to maintain continuity. So for families, it's keeping the roof over their heads, kids in school, bills paid, keep the lights on, for instance. For businesses, it's ensuring staff and owners can keep going even if the unexpected strikes. Individual relevance in 2025 for households, state support is limited and often slow. Got to go through the local authority in many respects. So protection fills that gap. It's quicker to market, to use another phrase. So think about that. If you couldn't work for 6 months due to illness, how long would your savings last? Most households today, under the strain of higher living costs, might last weeks, not months. So protection isn't a luxury. It's the difference between financial resilience and financial fragility at this point. So relating this to business, what's the relevance to business in 2025? Businesses in 2025. So for businesses, particularly SMEs, small, medium enterprises, the stakes are just as high. Losing a key person or a director isn't just an emotional shock. It can threaten cash flow, client relationships, and ultimately survival. So protection here isn't about paperwork, it's about business continuity. So when we talk about protection in 2025, we're not just talking about life cover, income protection, or critical illness cover in isolation. As I said, I did a webinar on this exact topic in 2023, and it was very technical and to the point and explaining what each of those products are. We're talking about, in this context, we're talking about what those things actually represent. They represent peace of mind, resilience, continuity, and stability. All buzzwords in a financial market space, but very, very important. In a world that feels unpredictable, protection is the safety net that allows people and businesses to move forward with confidence. And that's all a bit conceptual. So let's bring it down to earth. Let's look at some real world applications of how protection works in practice. We'll cover life cover, mortgage protection, income protection, critical illness, relevant life, key person cover, and private medical insurance. And we'll frame them around today's challenges. So looking at the real world application. So we'll start off with life assurance. So I see here, as I said, a few of the attendees. This might not be relevant for yourselves, but it actually might be relevant for your children, for your loved ones. Because imagine a young family, parents in their 30s, 2 kids in this example. They have a mortgage, they're both working. If one parent dies unexpectedly, the surviving parent isn't just dealing with grief, they're facing bills, school fees, mortgage payments. So a simple life assurance policy can mean the mortgage is cleared and the family isn't forced to sell the home in the middle of a crisis. So the point here is life assurance equals peace of mind, that loved ones can keep living their lives without financial upheaval. Then we get to mortgage protection. So right now, mortgage costs are front of mind, with interest rates higher than people were used to. I have conversations with clients nowadays that have come to their remortgage, the end of their fixed rate 5-year periods where their interest rates were 1.4% back in 2020. Today, you're going to be getting 4%, 4.5%, which will stretch many households. And that's on top of the fact that households are already stretched. So if the main earner loses their income, how long before repayments fall behind? Mortgage protection is about safeguarding the roof over your head. So the real world anchor here is that when you're sitting across from someone who's saying, my mortgage went up £400 a month, it really hits home that protection isn't an abstract idea. It's literally about keeping the family in their home. Then we get to income protection, which that coupled with critical illness is a trend or a theme, I should say, of very importance. Looking at income protection and critical illness cover. But let's say you're a self-employed contractor. No sick pay, no company benefits, no safety nets at all. What happens if you break your leg and can't work for 3 to 6 months? What happens then? Savings can quickly disappear. Statutory sick pay, if you're even eligible, is barely enough to cover groceries, let alone a mortgage. So income protection bridges that gap. It replaces a portion of your earnings so you can keep your household running. So the key message here, income protection isn't a luxury for the self-employed, it's survival. And that could also be related to a PAYE employee where the safety nets that employers are offering are in many cases nowadays not as adequate as they once were. The death in service, the private medical insurance, for instance, are not being offered in the same frequency as it was in previous times. The next product here is critical illness cover. So think of someone in their 40s who has a stroke or cancer diagnosis, very serious. But they might recover. But treatment, recovery time, and lifestyle changes could mean months or even years out of work. A critical illness payout provides a lump sum that can clear debts, pay for treatment, or simply remove financial stress so they can focus on recovery. So the message here, this isn't about if something happens, it's about what if. And important to note here that you are about 4 to 5 times more likely to claim on a critical illness policy before age of 65 than you are to claim on a term life policy to 65. So let that sink in. Private medical insurance is next. I'm not based in the UK, but you can see that private medical insurance NHS waiting times are long right now. They are you read that in the news, you hear that going around. People waiting for treatments that goes into the months. Certain treatments, I've had a couple clients waiting for hip replacements that months or even years. So for someone who needs surgery to get back to work, private medical insurance can mean the difference between waiting a year in pain or getting treatment within weeks and moving on. So private medical insurance isn't just about jumping the queue, it's about giving people access to timely treatment so they can get back to their lives. What value would you put on that in that sense? Then we look at 2 products for businesses. The first is relevant life plans. So for many business owners want to look after their staff but don't want the add-on of a big group scheme. A relevant life plan is a tax-efficient way to provide life cover for employees. For example, a small business with 10 staff can offer this as a benefit, boosting retention, showing staff they're valued, and doing it in a tax-smart way. The next business cover is in the form of key person cover. Imagine a small design firm with 3 partners, and one of them is the rainmaker, the one who brings in the clients. If that person falls ill or passes away, the business could lose half its revenue overnight. Key person cover provides the cash injection needed to keep the business afloat, hire temporary cover, or simply survive long enough to adapt. So the message for small and medium enterprises is losing one person can be catastrophic. Key person is again about continuity. So those are some of the real world application. There are many more, and the attendees of this webinar will have things that have happened to them in their careers, their lives, that obviously we haven't touched on or covered as further examples. But life cover, mortgage protection, income protection, critical illness, private medical, relevant life, and key person covers are fundamental in today's world. So the common thread across all of them is this: protection steps in when life takes an unexpected turn, whether that's for family, for an individual, or for a business. In today's world, those unexpected turns feel more common, not less, which is why protection isn't just about a product conversation, it's more a resilience conversation. Okay, so we're going to get into the balancing act, affordability versus necessity. So let's be honest. The number one objection to protection right now is affordability. That's plain to see. With household budgets under pressure, it's natural for people to say, I just can't take on another monthly cost. And that's completely understandable. So you've got to almost flip the perspective and ask a key question. Can you afford not to have it? The risk of not having protection is often much larger than the cost of having it. Think about this. If someone becomes unable to work for 6 months, the financial hit could be tens of thousands of pounds. Compare that to 30 or 40 quid a month premium that could have safeguarded them. So when you put it like that, which is actually more expensive? The next thing is protection as prioritization, not luxury. Protection often gets framed as a luxury, something to add once everything else is sorted. But the truth is, it's a foundational expense, just like food, rent, or utilities, because it underpins all of those things. I mean, a lot of people nowadays will be opting to keep their Netflix subscription over an income protection policy because they see that as they're not prioritizing that in their household budgets. So without protection, those other commitments can unravel very quickly if life throws a curveball. So key thing here is small adjustments, big impact. The good news is protection doesn't have to break the bank. Cover can be tailored, smaller sums assured, shorter terms, or staggered approaches. Even partial protection is better than none. A £50,000 critical illness policy, for example, could clear a chunk of debt or buy time, even if it doesn't replace everything. Think of it like seatbelts in a car. They don't guarantee zero harm, but they drastically improve your odds. Now we've got to frame protection as an investment. So another way to look at it is protection is not a sunk cost. It's an investment in peace of mind. It creates resilience. It allows families and businesses to plan with confidence, knowing they've built in a safeguard. And in times like these, high costs, uncertainty, fewer safety nets, the role of protection as an essential has never been clearer. So when people say, I can't afford protection, the reality is none of us can afford not to think about it. It's about striking that balance between today's pressures and tomorrow's risks, and making sure that if life takes an unexpected turn, finances aren't the thing that collapses. So let's take a deep breath. That gets us to the Q&A part of the webinar. I know that there are no questions as yet. I know I've sort of been talking about sort of highbrow topics and talking about resilience and framing it in that context. So if there are any further questions.
Yeah, we don't have any questions at the moment, but I'll give a couple of moments just for people if they wanted to pop any into that chat pod. Otherwise, we will pop on the survey, as I mentioned before, just to leave any feedback if you have a moment. Also, just because we have had some emails in the meantime, to reconfirm that if for any reason you can't attend these webinars, it is always worth to sign up because you will receive a copy of the slides and the recording of the presentation, usually within 24 hours of the presentation itself. So keep an eye out for those. And if you do have any questions off of the back of maybe rewatching, then reach out, and I'm sure Greg would be happy to answer any questions at a later date. So I'll pop the survey up. It doesn't look like we've got any questions coming through. So I'll leave this up for the next kind of 5 minutes. Otherwise, we will see you at the next webinar. Thanks, Greg.
Awesome. Thanks, guys. Thanks for attending, and look forward to hearing from you guys. If you have any questions moving forward, it might not be relating to you. It might be relating to a family member, as I touched on a little bit earlier. Could be children, adult children, and sort of making it relevant for them as well. So I see someone is typing, so we'll give it a minute or so. But otherwise, yeah, thanks for attending.